And welcome back to the Investor Shed podcast. I'm Nick Beveridge here with the co-host.
Hello, I'm...
Then you introduce yourself.
Oh, then I introduced myself. I thought you were just like, here's this dude over here. It's Jeremy Kitchen, the one and only, often imitated, never duplicated. People might try to duplicate me. I don't know.
Yeah. You know, we've done like a couple hundred shows now and we still can't get the intro.
That's fine.
It's mostly my fault.
You didn't set me up for success there. Usually you're like the beautiful Jeremy Kitchen, and you're just like,
Jeremy Kitchen.
here's my co-host.
And then you'll be like, I'm Jeremy Kitchen. That's what I thought in my head, but we didn't set it up.
Yeah, we don't really plan this, but we do plan actually what we're going to talk about. And we actually got a cool episode today. This is an episode for alternative investments, specifically like since real estate's kind of hard to deal with right now.
Real estate's tough.
Yeah.
Real estate's tough. And of course, we are huge believers of real estate. I still invest in real estate. I still have investments going on. I'm buying a property next week, but it is really tough out there for most people. So I thought today we'd talk about the stock market and alternative investing. We're talking mostly stocks, but maybe we'll touch on crypto a little bit too, and why it might be a good idea to diversify your investments instead of just focusing on real estate.
Sure. And we're saying that, and as we're saying that, I'll give a little legal plug. No, this is for entertainment and educational purposes only. We are not financial advisors. You can take what we say and you can drop kick it into the ocean for all I care.
Yeah.
Thank you for that, Nick.
Give a nice gesture.
But just do your own due diligence on any sort of investment that you partake in, of course.
Okay. Whatever. Just listen to us. We've got the best advice. And do what we say.
That sentence right there stopped you from getting sued, by the way, so you are welcome.
No, I put it in the show notes.
Did you?
I will.
Okay.
Yeah, that's what I do now.
Okay, you put it in the show notes. I love it.
So a week ago, we were at a small little training or conference or meetup or whatever you want to call it with Brandon Turner.
Yeah,
and AJ Osborne. They came to Coeur d'Alene, which was really awesome. They went into that rustic place that was packed. It was like a little coffee place, and
very rustic in there.
And every investor I knew in town showed up to it, and you couldn't even walk around in the place. But I thought it was great. They were given some pretty darn good advice long term.
Yeah.
I don't know if you remember, I had that question about AI robots. And
that was a really good question, and honestly, like I entered into the giveaway that benefited the families of the family members that passed away from the fire recently.
Good for you.
You got an hour consult with Brandon Turner if you won. And I was going to say, like, if I won, I was going to try to trade that into a podcast. Like, hey, instead of a consult, because I wanted to talk more with Brandon Turner and you specifically about AI. Like, I thought that'd be a very cool conversation, because
I didn't know that he was so also on the same page as me. Like,
a very big erection for AI. And I was
expecting that.
It was a cool conversation for sure. But so we went there. It was rustic. It was really cool. And
yeah. So they were doing Q&A, and I asked the question, paraphrasing here, I don't remember exactly, but hey, do you guys have any concerns in the future? And this is probably too far out. Maybe it's to even talk about, but with AI and humanoid robots being made right now, and in the next decade or so, do you think that we might have an issue with too much supply, as in with things eventually being able to be made cheaper when you have all these efficiencies of humanoid robots putting everything together? So, helping out with the huge labor shortage that we have, bringing costs down on actually building stuff, and then also building the materials. That cost could go down too, by quite a bit. Do you have any concerns that all of a sudden you will be competing with your existing rental portfolio with all this new inventory? And I was pretty shocked to hear it sounds like Brandon Turner already thought about all this,
right?
Which his response was pretty enlightening. Do you remember what he said? He started. Oh, Facebook. Yeah. Okay. I'll get on to that. Why don't you take over and I'll do the Facebook thing? But do you remember what? What his response was?
I don't remember exactly what he said, but it was somewhere along the realm of like, investors have about 5 to 10 years left.
It's his prediction, and I didn't think it was far off myself. I think a lot of people thought it was kind of a crazy talk, but Brandon Turner, he's a smart guy,
right?
He's kind of a futurist, and he's been right about a lot of stuff.
Yeah. We got to think of this hockey stick growth. Like, I think we are like nearing this apex of what AI can actually do for us, and the rate that it's growing and learning and evolving almost to be more of a tool in our life. He was absolutely right when he was saying, like, if you're not using these tools, you are going to get left behind.
Yeah. But not just that, these tools are going to outgrow us. And yeah, he thought, I make as much money as you can over the next decade and get out.
Yep.
Because he thought, once you have humanoid robots planting trees and doing all this stuff, the whole economy is just going to go into a tailspin. It's all about what you own.
Yeah.
And he just thought, yeah, make your money and maybe get out because everything's going to crash, and this could be the death of real estate long term.
Yeah.
Which was pretty inciting.
Yeah.
It was just, yeah. And I guess my suspicions were also being realized by other people.
Yeah, like knowing that you're not crazy by people who are in this business doing it. It's kind of it brings you back to earth, knowing like, oh, okay, I'm not crazy. Like this is a thing that's happening.
Oh, sorry. Go ahead. I'm trying to fuck with the live video, and I think it's just fine. I'll deal with it later.
Yeah, and I was talking with another investor too about AI, and he was talking about like his limiting belief was, AI can't do a lot of things right now. And I'm like, well, what can't it do?
Mm-hmm.
And he's like, it can't work. It can't do the work. And I'm like, I think that's coming faster than you think. Any of this stuff is just a computer program or a computer command away. It's coding.
Right.
It's a way to just it's somebody in a laboratory for 12 hours a day trying to crack a code on how to get a robot to work.
Well, and the hardware is it's in production.
Right.
And it's not just in production by Tesla. It's not just, there are several companies that are building humanoid robots that are going to help with the workforce.
Yeah.
Because there is a workforce issue. We have a huge labor issue, and that's kind of a nice thing that it's not just doom and gloom long term, because long term, if we continue with what we're doing, that is doom and gloom.
Right.
Because we are having less and less we are having less and less children, and our debt is growing.
Right.
So we're already on the way for long term catastrophe.
Right. And the whole baby boomer thing is like happening right now too. Yeah, so all these baby boomers are getting out of business, right? And we just don't have the bodies to replace them.
Yeah.
Like, obviously, people talk about, like, oh, they're taking our jobs. But, like, the reality is we need more people to work, or we need more things to work. One of the two, or both.
And we don't have the assisted living facilities to handle all these people either. So that was another good tip. Maybe get into assisted living.
Yeah.
Because there's going to be a huge demand for that.
Yep.
And then eventually your robots can help wipe all the asses.
Yeah. I bet they'll love that.
They won't care. They'll do what they say, or do what you tell them to do.
For now. Yes, that is the plan for the robots, for them to do as we say.
And as usual, we're getting way off topic here.
We don't do that.
It just made me think that I should be diversifying a little bit, because I've got rentals, I've got cash flow coming in. I'm going to keep flipping houses. I'm going to keep doing what I do that I know makes money, but I also feel like I need to have another game plan, and that's, stock market.
Yeah.
I feel like you can be a part of the growth that's going to happen. With NVIDIA and Tesla and some of these major tech companies, Palantir, you can get in on the action just by buying the stocks.
Yeah.
Because these companies are going to be the new blue chips.
Yeah.
One day.
Yeah.
There's just no stopping it. Like the path is being paved.
Right.
And you can get destroyed by it, or you can join.
Yeah. And I think a lot of real estate investors in particular have kind of an adverse relationship to the stock market, because if you hear stock market, people think like, oh, you're not a real estate investor, or you're not an investor really if you just invest in the stock market. I think it does get a lot of negative connotations to it.
Does it?
Yeah.
Oh, okay.
Specifically in the real estate community, because it feels like, everyone's doing things that are, getting returns higher than what the stock market typically averages. So it's just not a good use of people's time.
If you're heavily into real estate.
If you're heavily into real estate, right. And like,
yeah.
Yes and no. I agree with both, but I think it's up to, whatever your personal situation is at the same time.
Yeah, and I've probably felt that way. I've definitely felt that way in the past, but the reality is it's just not true. There are other places always to put your money.
Yeah.
They could be good, they could be bad. There's some investments that are going to be better than others. The stock market is just a market. It's like saying real estate's good. Real estate's always good.
Yeah.
And then you buy something.
General.
And then you just go buy, let's say, a condo in Seattle for $1 million, and it rents for $1,600 a month.
Yeah.
Yeah. Real estate's not always good.
Right.
You still have to be strategic about what you're buying and buy right. And that includes the stock market too.
Yeah,
You
absolutely.
shouldn't just be buying a bunch of Uber right now when there's robo taxis on the way.
Right.
Does that make sense?
Yeah, no, absolutely. Not all real estate is good. Not all stocks are good, right? Like it's.
So you just got to do your research. But what we are going to recommend is diversify a little bit. I would shave off a little bit. This is what I did. I'll tell you what I did.
Sure.
About I don't know, 10 years ago or so, I decided I was going to sign up for this Acorns app. And every time I used my debit card, it would round up and it would take that change and deposit it into this account, this Acorns account. And over about a year, it grew to like $2,000 or something like that.
And it's invested in stocks, by the way. That is invested in stocks, bonds, and mutual funds.
I think it was in a REIT or something like that.
Yeah, it does a lot of those things. But you're the one that actually got me into that Acorns Roundup as well.
Oh, okay.
I still use it.
Yeah, and it was a great way to invest by not I set something up once, didn't even think about it, and then all of a sudden I just went along with my life. I never noticed the extra money coming out of my account because every time I made a purchase, it just rounded up to the nearest dollar. It wasn't huge. It was just pocket change. Pocket change every day, and over a year, it was a couple $1,000. Still not much. But I was able to grow that into right now. There's about $42,000, and that was about 10 years. So that's with like really low level investing.
Yeah.
Now I stopped that Acorns app after just about a year, and then I opened a Robinhood account, and I sent that $2,000 and invested in Tesla when Tesla wasn't that much, and I bought and sold it. I was doing very unstrategic swing trading.
Okay.
And that's where you're in and out of a stock, usually in just a few days or weeks, but mine was more like months at a time.
Sure.
Where I didn't really have a good sense at the time, what was priced right, what wasn't. I just knew that I had this Tesla, and I felt like the whole world didn't know how valuable this car was.
Yeah.
Because I had 20 cars prior to that my whole life, and then all of a sudden I had this car, and it was just insanely efficient. It was fun.
Yeah.
It wasn't as expensive as everybody thought. Everybody thought at the time, this was 2018 or so. At the time, everybody thought that Teslas were, you had to have $1 million to buy one, or that they were $100,000.
Right.
This thing was like 40 something $1,000 at the time.
Yeah.
So it was like right when they released the Model 3, and it was like their mass production car that, anyway, what I learned was owning it for just a couple of months, the car was slowly getting better.
Yeah, they did like software upgrades.
There are software updates and I didn't know much about it until I was just driving it, and I was just like, holy crap, this car is insane.
Yeah,
like this is unlike anything I've ever had, and they just released this, and they have a long way to go. I'm like, I should really just invest in this company somehow.
Yeah,
and I never really thought about that about another company, because the reason why was that almost everybody I knew in my circle and that I met out in public, they had no idea about that car and how easy it was to charge and how efficient it was. They thought it was so expensive, or they're going to catch on fire. Back then, everybody just thought that they blew up.
Yeah,
and they had so much batteries. They thought the thing was going to go bankrupt. And I was just like, I don't know if I think they're just getting bad headlines. And then I looked into it a little bit, and I'm like, oh, there's all these big short players. And those are hedge funds and stuff that were shorting the stock. They were trying to make money on the company going down, and they had a lot of influence in the bad press.
Yeah. Isn't that wild?
Yes. Anyway, so that was my first, it actually wasn't my first venture in stocks. About 20 years ago, when I was working at Dave Smith Motors selling cars. This was when the market was crashing in 2008. I got into E-Trades, which was that website with the baby.
E-Trade.
And I thought I just heard that the stock market's going crazy, and I was just at a little Robert Kiyosaki seminar. And at the seminar, they said, hey, if you want to make money in the stock market, you buy when the stocks are low and you sell them when they're high.
Yep.
And you wouldn't believe it, but I just didn't think about that at the time. I'm like, oh, you can just buy stocks when they're low.
Businesses, yeah.
And then they can go up, and then you can sell them. But the thing about it was that they showed some charts, and they just showed, hey, look at this stock that's, 10 years old, and you can see common patterns of it going here. It's selling for $100 a share.
Yeah.
And then it sells for $130 a share. And then a couple months later, it's down to 100 again. And then it's around 130 or 150.
Yeah, yeah.
And then it's down to 90. And then it's down to this. And you can see this chart, and they're just showing you charts of random stocks like, oh, you can just pump some money into this for $90, knowing that eventually it's probably going to hit around 130.
Sure.
And then probably go back down again. And it was such a foreign concept to me at the time, but I'm like, how many people know about this? I don't know.
Flipping stocks, basically.
Yeah. So I decided to give it a shot. And I decided to give it a shot on cheaper stuff.
You did. I remember this. Okay.
And I was actually making money on my own. Well, actually, you know what? I was following some Twitter page.
Sure.
Of like people that did pump and dumps or whatever.
Yeah.
And they were like unvaluable companies. They didn't really have. I ended up making so much money that I quit my job and I did it for a living for about a month or so until I made some bad trades or trades that just didn't work out. And then I lost all my money. And then I had to get a job again, like cleaning cars.
Yeah.
But it was I actually took the leap to just like, hey, why don't I just try day trading every day and try to catch these patterns. After I lost all my money, I lost interest in that. I wanted to get back into real estate long term. And, I kind of exited that realm in my life for 10 years.
Yeah.
Or so. And then I picked it back up, in 2018 or so, 2017, 2018. Maybe it was a little bit earlier.
About 10 years ago when you sold your camera, right? You sold your camera and you took all the proceeds from that, your GL1?
Oh, maybe.
And you dumped them into penny stocks and lost it all?
Well, that was 20 years ago or so.
Okay.
That was a long time ago.
We've known each other for a long time.
10 years ago or so is when I did the Acorns app and started building up a little account. Now, I want to make this clear. This is not my retirement account.
Yeah.
I have a separate retirement account now.
Smart.
This is an account where I can play with money like I'm at the casino.
Right.
This is your this is what like Chris Carmelo would call your big money account. You can treat it no matter how much money you have in there, the way rich people treat their stocks, where they will take big risks on a regular basis. And if they lose everything, it's not the end of their life. It's money that they're willing to lose. And that's the big difference that I think you've got to, I would recommend anybody who's not investing, who maybe has a retirement account, leave your retirement account alone.
Yeah.
Leave it in something safe like the S&P 500, the index funds or something like that. But absolutely start a new account like on Robinhood or something is the easiest way. And just, put a little bit of money in there and start playing with that and feel free to be as risky as you want.
Yeah.
With that money, money that it won't kill you if you lose it all.
Yes.
That's what I recommend. That's what people that are much richer than me recommend that.
Yes.
That you've got to have a separate account away from your safety net.
Yes.
Completely away from your safety net that is designed for you to learn how to grow it.
Yeah. And take a couple risks for
and
sure.
take risks.
I like strategically. That, honestly. I like what you said about, this is money that like, honestly, like if my Robinhood right now, if all my stocks went down to zero, it wouldn't affect me.
Yeah.
You know what I mean? Like that's the money you should be playing with. Like this is not something I'm gambling my retirement on, like you're saying, or my family's inheritance or anything. This is money where I'm like, oh, like this has an upside potential. Yeah. It also has a downside potential, as many investments do, but it's a risk you're willing to take, of course. And again, like if my money just suddenly went to zero, I would accept that. I wouldn't feel good, but it wouldn't hurt my family. You know what I mean?
Yeah.
Yeah.
And the reason, a big reason why I wanted to do this podcast today was just overhearing. So, my brother-in-law, Dan, and his wife, they just got into stock investing. They had their own retirement accounts, but they finally opened an actual account where they can purchase stocks.
Yep. And
they're super excited. And he wants to buy like some of the bigger stocks like Tesla and Palantir and all that stuff. That are kind of, yeah, I think they have mostly that. They actually have mostly like Berkshire Hathaway and stuff. It's still pretty safe stuff. But we were at dinner a few days ago, and his wife said something that just seemed insanely idiotic to me, but probably the way a lot of people think.
Mm-hmm.
And I think it's really important to be like, okay, you only lose money when you sell.
Mm-hmm.
And here's
You also
what
only
happens.
make money when you sell, by the way.
You also only make money when you sell.
So yes,
totally.
let's put that into perspective too.
It's converting to the US dollar.
Mm-hmm.
And the reason why you would want to invest in stocks or crypto or real estate is to get out of the US dollar, because the US dollar is its own stock, and that thing's going down every year.
Those are like bonds, basically, right?
Well, it's the US currency. It is
bonds are backed by currency, or bonds are like how do bonds work? Give me like the 20-second rundown.
Well, I've never bought bonds, but bonds are what people buy.
It's attached to the deficit.
They're loans to the U.S. government.
Loans to the U.S. government, right? Yeah.
They're loans to the U.S. government that pay very little.
Yeah.
In returns. But I'm not talking about investing in bonds.
Right.
You might want to have a small piece of that for your portfolio.
Yep.
But in my head, it doesn't make sense with realistic inflation.
Sure.
And that's what we're always battling is inflation, because inflation's there. It is the White Walker.
Yeah.
You know,
my
people don't believe in it, but it's there.
My thoughts on bonds, and I know this is a stock episode specifically, but bonds are kind of tied into the stocks, bonds, mutual funds, index funds market, right?
Yeah.
I don't think bonds are a bad idea. I don't think you don't invest in bonds to like get rich.
No.
Like you invest in bonds
to park your money.
And then when inflation is actually down, that's when your bonds are doing the best, if I'm not mistaken. So it kind of works opposite. Like if inflation's high, your bonds are low. But and that's how that works.
Yeah, I don't know.
And it's something where an investment advisor would tell you to be like, yeah, you should have a little bit of money in bonds, whether it be 5 to 15%.
Yeah, or something like that.
Have a little bit, just in case.
Net. It's like owning gold or silver.
Exactly.
You know,
my bonds make like very little dividends, but I'm like, oh, that's cool. My bond paid me like $2.
Yeah, and we did a whole episode about silver. Yeah. It probably came out a few weeks ago or something like that. And I have such a small amount of my actual net worth in silver. It's ridiculous. It's like 1%.
Do you know what and I love that, but do you know what I don't like about precious metals?
They don't pay you anything.
They don't. Yeah, exactly. They don't pay you anything, but you can't use that metal to make more metal. Like holding silver doesn't like every 3 months be like, oh, since you've held silver for 3 months, you get this dividend in silver.
Yeah, it's a small insurance.
Exactly.
It's a very small insurance policy against an apocalypse.
Right. Exactly.
Or a complete catastrophic event against the stock market and the US dollar and everything, because then here's some real money.
Yeah, this is real currency
that is that has stood the test of time.
Right.
But in today's world, I don't believe that it should be a very big part of your portfolio, because it doesn't produce anything. It doesn't have any real utilitarian value where it can be used and make more and multiply.
Exactly,
just like you're saying.
Yeah, and that's what's like cool about like stock market. I don't know when dividends happen. Typically, they're every 3 months. Sometimes they're every month, depending on what stock you're in. Every quarter.
So on average, and we'll get it. And we're actually going to talk about this. We're going to talk about what is a PE ratio, what is shorting, what is puts, calls, and the difference between owning a stock like Tesla versus Apple versus a high paying return like a REIT, which is something you can still just buy.
Yeah, or an index fund or a S&P 500 too.
Yeah,
cool.
But yeah, we should get into that a little bit.
I love it. Let's do it.
Okay, so let's see here. Let's talk real quick about analyzing a stock.
Okay.
Now, here's what a lot of old school people on Wall Street really pay attention to versus seems like a huge percentage of investors that are coming. A huge percentage of investors that are coming, the younger people, they don't care.
Sure.
They don't care about price to earning ratio. They buy Dogecoin.
Yeah.
They buy Shiba like we just did. They buy things that have really, they don't understand economics. They don't understand the value of assets. They just think, hey, this is cheap. It could go up. Let's buy it. And
that was my thought at the beginning too.
Sure.
Like, yeah.
And it's okay, I think, to have a little bit of piece of that in your head, but it should not dominate it should not be 80% of your portfolio.
Sure.
I think little like high risky, non-utilitarian little crypto trades myself, they're very, very low on the portfolio. It's like 0.25% of my portfolio.
Yeah.
Is crypto. It could have been a lot more if I would have kept that Bitcoin.
Yeah, you messed up.
Yeah, Bitcoin hit all-time highs this morning.
123,000, something like that.
Yeah, yeah. If I would have kept the Bitcoin that I flipped in 2017, I flipped like a little over one Bitcoin. Like I made like 2 transactions, buying it. At one point, I can't remember how much, but it was a little over one.
Yeah.
1.5 or something like that. And then I made like $1,500.
Yeah,
I like
cool.
doubled my money. But if I would have just held on to that,
but you also don't know what you don't know,
right? Well, no. But I was told back when I was buying it by Zach Doty by multiple people online. You just hold on to Bitcoin; it can go up to $1 million someday.
Yeah,
because it's scarce. People are adopting it. Everybody just starts using it, and it works the reverse of the U.S. dollar, where it will just over time, it'll be volatile.
Yeah.
But over time, it will just go up and up over the years. I was told that. I believed it. I still sold it when I doubled my money. And if I would have just kept it, this was not long ago. This was 2017. That was 8 years ago?
Yeah.
Not 8 years ago or so. That 1.5 Bitcoin would have been worth like $150 something thousand.
Yeah.
If I would have just held it. But I'm not good at doing what I'm told.
Right. But you also made money. So like, again, you pulled out, you converted it to real currency. It's like you didn't lose, but you could have won way more.
Could have won. Yeah. Now, the cool thing is I took that money and I probably invested in real estate, and I probably made a decent amount.
Right. What's the dollar percentage of that money that you put to work? Where did that go? You know what I mean?
Yeah. Hey, quick commercial break here. Thank you so much for listening to this podcast. I really do appreciate it. If you want to give back, let me help you buy a house, or I can help you sell a house. It's the only way I make money when I'm not investing in real estate. I don't make money on this podcast or the events I do, but I do make money only when I help people buy and sell houses. So if you're looking for your next investment and you're here in North Idaho, I want to help you personally. If you are not in North Idaho, I can still help you out. I have a vast network of referral partners all across the country, and I can find the right real estate investor savvy agent for you so you don't have to. It doesn't cost you a thing. Thank you for your support. Back to the show.
So,
yeah.
It's interesting to think about for sure. Like, and I try not to with my stock portfolio. I know we kind of have a different outlook on and perspective on how actually stock investing should go, or at least for what we own personally need. Mine is like the missionary position of stocks. Man, like I don't do any of this PVE stuff.
PVE, price to earning ratio?
Yeah, PT, price to earning ratio. I don't do any of that. I just set myself to automatically buy, and I kind of go for it, to be honest with you.
Yeah, and that's totally fine.
Yeah.
Now, I'm not encouraged. I'm just encouraging you being aware of like if you're buying a good, what's considered a good ratio.
Sure.
Now, okay. So price to earning ratio. So whenever you look up a stock, let's say on Robinhood, if you were to go to Tesla, which is such a hot stock. Tesla is such a hot stock, but guess what? It is, in some people's eyes, way overpriced. And how can you tell that? It's the amount of market cap, like how much is the company worth by how many shares of stock are out there versus how much they're trading for, and then how much income is brought in.
Gotcha.
So with Tesla, for instance, it currently, right now today, has a price to earning ratio of 172, meaning that you're paying $172 for every $1 that the company earns.
Gotcha.
Now, a more mature company. Now the reason why this has such a large gap is because so many people invest in Tesla because they can see the future.
Sure.
They know that Tesla's it's a growth stock.
Right.
It can be overpriced right now. People don't care because they know that they're going to be the number one. They already are the number one electric vehicle. They have millions and millions and millions of more vehicles to make over time. They're going to get into robo-taxis, which they already started and they actually started on time, and it works. And they're going to start expanding into multiple cities, basically taking over Uber. Also, there's talks of merger with XAI, and they're going to put Grok 4 into the cars. So you're going to have AI in their cars. But the biggest thing is the humanoid robots, the Optimus that they've been working on for the last 8 years or so.
They're called Optimus?
Optimus is the name of the robot that they're building.
Cool.
They're building a humanoid robot, and they've been building it for years. But that is predicted to make them a $10 trillion company over time.
Gotcha.
As they want to make 1 billion of those,
right,
to help with the workforce and to help make everything, just the cost of everything, come down. Everybody has a humanoid robot or two at the house, do all their chores. It could be your companion. Maybe you can fuck it one day. Who knows?
I imagine people are going to break these in very weird ways. Yes.
Yeah. Sorry for the language, but that's just being real.
Yeah, you're not wrong. People, like, once people realize that there is a thing that will do whatever they say, that's going to get broken pretty quick.
It's not just going to be mowing the lawn.
Yeah.
Might be mowing your wife's lawn.
Sanitize your robots, by the way.
Okay.
So you buy them off the used market.
Anyway, so Tesla, but it's not just Tesla making this.
Yeah.
There's actually a bunch of other companies that are making humanoid robots. Did you know Apple's making humanoid robots? They're just very secretive about it right now.
I did not know it, but I'm honestly not surprised.
Surprised.
I think honestly, and we talked about this a little bit ago, if you're not using AI and utilizing it, you are going to get left behind in this industry, and people are trying very hard to scalp and keep up with the Joneses, right?
Yeah.
Because the apex is coming.
Yeah. And I almost feel like when Apple releases their humanoid robot, it might actually be probably more popular than the Tesla one, just because I feel like there's a lot of trust in Apple.
Yeah.
And people like their... I trust it.
I know you do, but
not a lot of people. A lot of people don't.
Yeah.
But there's still, it still has 200 million fans.
Right. I'm not saying anything about that.
The robots might... I feel he has a tendency to be the best person in the world at scaling manufacturing.
Yeah.
And keeping it cheap.
I hope when he shows the robots on stage, he takes a ball bearing again and he tries to break it.
Yeah.
And he does.
And it will just catch it.
Yep. Crushes it.
Anyway, sorry, we got way off topic. We're talking about the price to earning ratio. Okay. Again, Tesla, when you buy it, so 100, that's very high.
Yeah.
The average is around 25 is what you're going to want to see in a decent company for every, that means if you're paying $25 for a share, the company earns about $1.
Gotcha.
So compare that to Apple. Apple's price to earning ratio is also pretty high, but it's 33.
Yeah.
Way more grounded. So here's the difference. Apple doesn't pay, or Tesla does not pay a dividend.
No, they do not. Correct.
Why don't they pay a dividend?
They don't have to.
Because they're reinvesting all their profits. It's a growth stock.
Yeah.
And this is why they don't pay dividends, because it's not like they've stopped and they're just producing cash flow now, and now that all the money that they make, they're sending back to their investors. No, they're taking all their profits and they're reinvesting it into building more gigafactories and more. They're in the growth stage, and they probably will be for many years.
And I mean, yes and no, but there's probably other reasons why they're not a dividend paying stock. It just, honestly, it could just be a personal choice. Amazon does not pay dividends.
Right. They're still in growth.
Are they still in growth?
I think so. A lot of companies, when they're kind of newer, Tesla's still somewhat of a newer company.
Sure. It's hard to think of Amazon as a growth stock. It feels like Amazon is going to be taking over the world with Tesla at some point. You know what I mean?
Right. But they also keep investing in new infrastructure. So they're taking a lot of their profits and reinvesting. But I don't know as much about Amazon.
Yeah.
I do own some Amazon. I own some Amazon stock.
I do too.
Very small amount, but I do.
Mine doubled in price. I've owned Amazon for a while, and it split and then it doubled, and it's been good to me.
Yeah. But let's stick on the price to earning ratio, because I want you guys to have a good idea what this means. When you compare Tesla and Apple, big companies, they're in the top 7 of $1 trillion companies.
Yep.
Tesla is worth $1 trillion right now. Apple's worth just over $3 trillion. The dividends that Tesla pays out is currently 0. That does not mean that they won't someday.
Right.
One day, Apple or Tesla could easily start paying dividends once they feel like they're just in a cash flow stage.
Yeah.
And they're not, they decide not to grow anymore. So, Apple, though, they're paying 0.5%, 0.48. So what that means, though, how much money are you making on Apple? If you had, let's say, $50,000 in Apple stock, you'll get approximately $240 a year, or $60 a quarter. Meaning that you can, every quarter, with your Apple stock, take your wife to dinner at Applebee's
for $60, like with drinks.
Applebee's
with
is what I'm saying, not with drinks. And that's about all you get.
Yeah.
Now, obviously, like with Tesla, the thing's growing, so you're probably going to make more money, my guess, holding Tesla stock than you will Apple getting the dividends.
And dividends work because they pay a certain percentage of the company's profits back to investors and shares. Am I correct on what a dividend is?
Yeah, a dividend is profits that go to the owners.
Yeah.
And when you own stock, now, some people don't even know this. When you own stock in a company, that means you are
you're part owner.
You're part owner of a company. You're part owner of Tesla.
Yeah.
Or you're part owner of Apple, or part owner of whatever.
Put some respect on my name. I own part of Kraft, who sells mac and cheese.
Yeah, you're a part owner.
Yeah.
And that means that you are entitled to some of those profits when they eventually pay out profits.
Yeah.
Right now, Tesla's not paying out profits because they've decided to reinvest all the money they make into growing. That's been part of their plan from the start.
Yeah.
So you just got to be aware of that.
Right. And I know you're trying to get to your thing, but so dividend is basically like if Apple, hypothetically, like it says, is the dividend is 0.48%.
Yeah.
They pay back 0.48% of their profits back into investors who own stocks, depending on how many stocks you own, correct? Is that how a dividend like actually works?
Well, let's see. If you own $50,000, yeah, approximately. So annually, you'll make about 0.5%.
Gotcha.
On the amount that you own.
Yeah.
So, yeah, if you owned 100,000, just for simpler math,
right,
$100,000 worth of Apple stock, and they're paying 0.48, about half. Figure about $500 is about 0.5% of your investment annually, and they'll pay it out in dividends quarterly. So we break that up, divided by 4.
Right. And again, like this is not like the long-term play with this, but you know, it'd be nice if somebody's like, oh, I just need an extra $500 a month.
Yeah.
Put it in Apple if you want.
Right.
Or $500 a year, right? And
yeah. Now, if you were like, but I want more than that.
Yeah.
There are these cool tools called AI that you could just type in, hey, what's the biggest dividend paying stock right now?
Yeah.
I did that this morning. Right now, the biggest paying dividend stock out there is Two Harbors Investment Corp. Or the little ticker, if you want to find it on the stock market, is TWO. And it is a REIT. So they invest in real estate.
Yep.
And they pay out their dividends. Currently, right now, if you had that same $50,000 investment in that stock, which you could just purchase, it will pay out annually 60, let's see, annual income of 40%. Oh, hold on. I did have it here. There it is. If you had that same $50,000, it would pay you $8,200 a year. And that's $683 a month.
And that's versus like the 280 or 260 or whatever from Apple, right?
No, this is monthly.
Yeah. But what was Apple annually? I forgot.
Apple annually was $240.
$240 annually versus $683 a month.
Versus, okay, so annually, every year they'll pay you $240 Apple to hold $50,000. If you hold this stock, $50,000 every year, they're going to pay you $8,200. Or if you want to break that in monthly, $683 a month. It's almost like owning one of those cheap houses in the South that maybe, a $50,000 house that pays, $700 a month or whatever.
Right.
But no tenants.
Yeah. You don't have to deal with any of that.
You don't have to worry about fixing roofs. You don't have to worry about never actually receiving cash flow because they're not paying rent.
Yeah.
That's a pretty good return.
It is.
So
do you reinvest your dividends?
That's a 16.4% yield.
Do you reinvest your dividends, or do you take them and put them into your cash account?
I've only owned one stock ever that paid dividends, and I had it reinvest.
Yep. All mine I have
purchasing more.
Yep.
And that was Lennar. I owned Lennar for a little while.
Nice.
And that's a big home builder.
Yep.
Yeah.
Cool.
Anyway, just something to be aware of. So, let's see. We talked about that. I just want to make sure we didn't skip over options or anything. I don't think we did. Okay.
Yeah, well, we didn't really talk about options. You do a lot of option trading at the moment, correct?
I have, unfortunately.
Yeah, unfortunately. And this is all stuff that like I don't want to put that much emphasis onto my stock account. I don't want it to be like something that takes over my life.
Yeah.
But kind of just break down options real quick if you don't mind.
Okay, so you guys, disclosure again. I know Jeremy already did it. Options are far more riskier than anything we're about to talk about.
I like how you did the jerk off motion when I was giving a disclosure, and now you're actually giving one.
Yeah, the only time I've ever really lost money, twice have I ever really lost money in the stock market, recently over the last few years. One was this three-wheel company, this three-wheel electric vehicle company.
Okay.
That I invested in. I invested I think a couple $1,000 worth. And bought this stock when it was at like $2 a share, and it was in Oregon, and they were building little electric vehicles. I left that money in there for about a year, and then all of a sudden, the company went to $1 billion valuation.
Yeah,
insane. I think Mark Wahlberg was helping like advertise it and stuff, and they just started selling shit, and I was just like, this just seems overvalued, and I sold 20 grand worth. My 2,000 went up to like 23,000 or something like that. And I remember taking 90% off the table and sold and converted into cash. And then I kept like $2,000 worth or two or $3,000 worth of it. And then what happened was over the next few years, the company went out of business. They went broke. The stock went to zero.
So you didn't lose money on that. You said you lost money.
I did lose money. I had $2,000 to $3,000 invested,
but you started with a $2,000 investment and you converted that into a $20,000 gain, and you cashed out.
I did.
So you did not. You're still up 18. You did not lose on that deal. Just to clarify.
But what I'm saying is, you can lose money.
Yeah, of course. Okay.
That stock went to zero, and I owned $2,000 worth of it. Sure, did I make 20 grand off of it and run away? Yeah. But I decided to keep some, which I do on some of these mega high growth. What I've been doing, like, there's this other electric airplane company that I bought into about 3-4 weeks ago.
Okay.
Called Surf Air Mobility or something like that, and I bought into it because I heard Palantir just bought 20% of it. And it was going for like $3 a share or something like that. I threw 10 grand into it.
Okay.
I made it eventually, it went up like 30%. And I took 90% off the table. Okay. So I sold at 13,000, and I left some money there. I think I still had $3,000. Sorry. I left like $1,000 worth of shares there.
Okay.
I can't remember. I think almost 300 shares.
So you still made money.
Yeah. I took it off the table. If I would have left that there, the stock went up to almost $10 from $3.
Yeah.
So I could have more than doubled my money on that one.
Yeah.
But I just left it. And that's what I do on some of these riskier high play ones. I'll cash out around 30%.
Yeah.
If I can make that within a month or so, I think that's a great return.
Yeah, absolutely.
And then I'll move it to something safer.
Yeah.
And I'll keep 10% as just a long term. We'll just see how this goes.
Yeah, we'll see what happens, right? I've already made my money. If this goes to zero, so be it. I feel at peace.
And these trades that I just talked about, the last two, where they go up over 100%, not common.
No.
Those are lucky home runs, but you get those when you're investing regularly.
Yeah.
Most of the trades that I've done, I'll usually make 5 to 10% and I'll walk away.
Yeah.
So I make smaller swing trades that will last anywhere from just a few days to a few months.
Right. And I don't want to get like too deep into taxes because I know that's not what this is about. So when you convert to US dollars, obviously that is a taxable occurrence.
Sure.
Right. So, I mean, and it's not a bad thing to make money because if you have to pay taxes on it, so freaking be it.
Yeah.
Is the juice worth the squeeze, even if you're, making 10% on some of these things?
For me, yeah.
Yeah.
Yeah. I want to be able to be in a position where I owe taxes.
You're going to pay like 20 to 30% like, capital. It's different than capital gains rate, isn't it? Or is it capital gains rate that you're taxed on?
Well, I don't care.
Okay, it doesn't matter. Yeah.
I don't care about making gains on a regular basis. My taxable liabilities, I'll be fine to pay them, but it's my whole portfolio at one by the end of the year. How did I do? Profits and losses, because I do have losses in there.
Yeah.
And I was about to get into options. Options is where I've lost most of my money.
Okay.
But still not enough to, like, my swing trades have kind of made up for them.
Yeah.
Because options can be a little difficult to figure out, and I'm not done with options.
You're still trying to figure it out,
because the best players in the world trade options on a regular basis more than they do stocks. What you're doing is you're paying a premium to be able to purchase a stock at a certain price point, whatever you feel, higher or lower than what it currently is, by a certain expiration date, which could be by the end of the week, or it could be 2 years from now.
Okay.
You can set the expiration date, and there's all these sub-markets where these option premiums are trading at a certain price points.
Gotcha.
So, for instance, instead of me trying to explain it, let's go to Tesla today, and let's say that you're sure Tesla's trading right now at $315. If we look at the last, let's look year to date, and you can see a common pattern here. Right here, around 360, 355, 360 went down. Up here, we're looking year to date. It got around 340 down. Up here, 350 and down. Almost came up to 350 again, down. So what I'm recognizing multiple times over the last year, it's gotten to at least $348 before it started going down again.
Sure.
So if I wanted to have an option, I can go to trade options instead of the buy button.
Right.
And I can make a call and predict that, hey, I'm pretty sure that this might go up. And let's say over the next, let's say by September, in 67 days, I'm pretty sure that it will go to 340. Now I can pay a $20 premium for that right now. So I can go here and I can buy, each contract is 100 shares, but I'm only paying $20 per contract, or per share for the contract.
Gotcha.
So I'm already betting that it's going to, in the next couple of months, be worth at least $20 more than today.
Sure.
Because I'm paying for this option to purchase it for $340. Now, if I made now what you can see here though, is that trading so far just today on these options, on the low end, $19, on the high end, $24. It swung that much just today on that one option.
Yeah.
I can trade in and out of this whenever I want.
Gotcha.
The longer I let it sit, and if it doesn't look like it's trending this way, if like Tesla's still down this number will eventually go down and down and down. This is what you're valued at, your premium. So you're taking a big bet, because every one contract that you buy costs $2,000. But I could be in and out of it in a day or so if it goes to $25, because it's already just in a day done that. But over time, now what the mistake I've been making is that I'll usually get something that expires much sooner, like within 11 days or so.
Sure. You got a lot of red in there.
Right. So these are down. These are showing like, is it up for the day or down for the day? Up for the day or down for the day? But this is predicting when you're doing a call option that the price will go up. When if you're doing a put option, you're predicting that the price is going to be going down.
Gotcha.
At a certain date. So that's the 10,000 foot view, I guess.
Interesting.
But a call is betting that a stock will go up at the right price to buy it at a certain price before it expires. Now, when that option expires, all your money's gone.
Oh, really? Okay. So you have to get rid of it before that.
Or you have to buy, hundreds of contract at a premium that's probably they become worthless.
Sure.
So you have to be in and out of them fairly, before they expire.
Before they expire. Got it.
A put option, you're betting that it will go down,
Mm-hmm.
and right, you're selling it at the at a lower price before it expires,
Sure.
basically. So options just give you huge leverage.
Right.
So you can control $10,000 worth of stocks for just a few $100.
Sure.
Basically. Does that make sense?
Yeah.
Because you're controlling those stocks, and you have the option to purchase, $10,000 worth of stocks or whatever.
Right. Right.
For a fraction of the money. So it gives you leverage to be able to make much larger returns,
Mm-hmm.
but very risky because they can go down.
Right.
The second you buy something like that, it could be down like 10%.
Yeah. I would say like this like strategy is like it's like stocks 4.0, to be honest with you. Like this is like something
it's very
that
high, and I lost a lot of money with it.
Yeah.
I've learned to trade smaller options instead of like $7,000 at a time. I'm now just a few $100s at a time and just trying to get small wins
and trying to figure it out.
Try to figure it out over time.
Yeah.
And then also I'm gonna just be following what other people say that have had more success at this.
Right.
I've been trying to use AI to help me out because it actually did at first.
Yeah.
ChatGPT was like, hey, buy this option at this day for this thing. The shitty thing about it didn't really actually know what things were going for. And it wasn't always giving me the most updated info. And over time, I just found it to be worthless. But it did get me into it.
Yeah.
And it helped me make some pretty successful trades at first. And then I lost money, not really knowing what I was doing. Didn't really know that almost every day that as you get closer to the expiration date, if you're not ticking towards that target price, your options are just becoming worthless. Like they could be cut in half or by 75%.
Yeah.
It's an easy way to lose a lot of money quickly, but it's also an easy way. I mean, you can.
It's high risk, high reward, right? It's a lot of these things where if you can lose a lot of money really quick, you can also gain a lot of money real quick.
Yeah.
Otherwise, people wouldn't do it.
But options are a great way. Like you can eat. I'm going to say this because I've done it. You can easily double your money in an afternoon.
Yeah.
With options sometimes,
or you can easily lose it all to zero, and then that's something like.
Yeah,
and that's why I'm saying
it can be gambling. That's why you got to be a little more strategic and set your expiration dates out a little bit further, and again, know what's going on with the company.
This feels like, again, like something that feels like stock investing 4.0. This is something that I would recommend to somebody who has knowledge of the stock market, knowledge of the company that they're working with, and has the time to actually sit down and put into these options. Because I don't think a lot of people have the time, and I think that's
if you don't have the time, don't stay away from options.
Yeah, that's the main inhibitor for this. Like, because I don't want to do this like 40 times a day, being like, oh my god, am I going to make $10 here?
Yeah. Because you're also competing against computers.
Yeah,
there's a lot
of do things in nanoseconds.
Yeah, there's a lot of automation on this stuff where I mean that's where these buildings are. That's why these buildings are so big when you go to New York. It's because they have computers that make these trades for them.
And honestly, like again, we do stock investing completely different. There's nothing wrong with that. I think it's just it's whatever suits your needs. To somebody just getting in the stock market and you're like, wow, this is kind of complicated, this is a lot, I don't know what I would do. My advice would be very simply just get into like a Vanguard total market fund or a S&P 500. To be honest with you, like that's 90% of my portfolio. I don't hit huge swings. Like sometimes like the stock goes down, and at that point I consider it like, oh, I just bought discounted stock today, right?
Yeah.
And it works well for me. Like I look at the numbers, all the numbers are generally going up, and it's not something I have to like put my heart and soul into. You know what I mean?
Totally.
But again, that's a very advanced strategy, and I think it works well for a lot of people. Yeah. I think if I were to try that, I would lose everything.
Yeah. And I think some of the best from Warren Buffett, he gives some pretty solid advice, just saying invest in what you know.
Yeah.
I know Tesla really well.
You do.
I'm obsessed with it.
Yeah.
I'm a weirdo, and I'm always listening to podcasts about what's going on with the company, and where they're expanding and what they're doing, and all the bad news and all the stupid political fake news too of like the Trump and Elon fights that always bring the stock down. And those are just, I feel like the more and more I'm invested in knowing about this company, the more I can take advantage of the idiots that sell at a bad time.
That's true.
And actually, I was going. So we were. Not to say idiots or anything, but we were talking about earlier, and then we got distracted with our conversation.
We don't ever do that.
Yeah. About a week ago, I was out to dinner with sister-in-law and brother-in-law, and they were talking about how they were investing and stuff and buying all these stocks, and we were talking about this. We were talking about stocks. It was great.
Yeah.
And then she mentioned, I'm just so afraid if the market just tanks and goes down in half, and if it does go down in half, I'll just sell it all. And I was just like,
yeah.
And I just looked at her. I'm like, what?
Yeah.
And my wife was like, yeah, like nobody really caught it except for me. Like, that's not what you do.
That's when you buy more. Double down.
Like, that's how you lose money is when you do sell.
Yeah.
So
yeah,
out there,
when
when your stocks fall, you don't sell. You buy more. If you know about the company, if the company's not going out of business, like a 3-wheel electric vehicle.
Well, the problem was and vehicles usually have 4 wheels. So your first problem was you invested in one less wheel than you should have. So,
right. I'm just saying it's not often that big businesses go out of business.
Yeah.
Tesla's not going out of business anytime soon. They don't really have any debt.
Right.
They have a lot of cash.
The S&P 500 is not going to like go out of business.
There's still a lot of people that hate Elon that still buy Teslas.
Yeah.
It's a good, superior product.
Yeah, absolutely.
The stock price can be incredibly volatile.
Mm-hmm.
And all I'm saying is that you can take advantage of it.
Yes. That's a very good point. I think it's fascinating that people the panic sell is so hard for these people.
Yeah.
And I don't want to call anyone idiots because I think there's just a lot of non-information or there's a lot of panic, right? And when that panic happened, it's
people get emotional.
Your fight or flight kicks in. And it's like, oh shit, I need to get out right now before it goes to zero. You know, like I'll take 50% of whatever.
Yeah. Yeah. Your monkey brain takes over. People take losses way more hard than they do. Like people don't celebrate wins as hard as they beat themselves up with losses.
Yeah.
But you said at the beginning too. Mm-hmm. You don't actually win unless you sell.
Yeah.
That's true.
Mm-hmm.
But when you sell, you convert to US dollar. What are you going to do with that money?
Right.
You know, so you got to be strategic about that too.
Yeah.
I do here and there. I sell stocks too early most of the time.
Yeah.
But I have been able to grow my portfolio by, from $30,000 just a couple of months ago to $42,000, while the stock market has been down.
Mm-hmm.
And up and back down.
Yeah.
And, just because I'm taking advantage of what I know.
Yeah.
And it's not just Tesla. I know some other companies too that I'm following pretty hard.
Yeah.
NVIDIA is another one it's probably at the point where it's almost guaranteed to just print money for the next few years.
Yeah.
But like it might be at a point where it might people are going to start taking their wins. So it might be a good time to swing trade that one.
Sure.
But keep most of it. So that's another thing too. If I'm if I don't want to sell a stock, but I want to take some wins, I sell half.
Yeah.
Sell like half. And then I'll get back in when I know it's eventually going to dip again.
Right.
There's going to be some bad news. People want to sell off.
Yeah.
But that's my strategy for beating. I want to beat 10% annually, and I'm kicking its ass.
Sure, and that's great. I love it.
And it's a game to me, and it's money I can afford to lose.
Exactly. And like again, like I typically just stay invested in a thing. I don't like do a lot of like, oh, it's up. I'm gonna high and put it into something else. I'm like, I do daily investments. So like right now it's like $15 a day split through all my stocks. Crypto, I do a little bit of crypto, automatic buys. So no matter what the price is, basically I'm dollar cost averaging.
Yeah.
And that's working for me. It doesn't work for everybody, but again, that's my simplistic outlook on this.
Yeah. And this isn't going to make or break me. Like, like I said, like 90% of my net worth is tied up in real estate.
Right.
That's where
this is fun money.
This is satisfying my urge to go start new businesses.
Yeah. It does when like those numbers grow up and you're like, wow, cool, I did a really cool thing.
Yeah, I don't want to.
But again, you only actualize those gains or losses when you actually sell. So like,
yeah.
And I just one more thing on the panic thing real quick. Like I think a lot of people have, 401ks or retirement accounts that are invested in the stock market. That's kind of typically what they go into. Even my in-laws, like their stock portfolio last month or 3 months ago was down like 30% and they were panicking.
But they didn't sell, right?
They did not sell. No,
come right back.
Yeah, but like the panic set in and they almost pulled out and I'm like, please don't. Please be patient. Like I promise you.
Buy more.
Yeah, go buy more, yeah.
This is discount mode.
This is what I'm buying right now.
This is something you guys got to change your mindset. Yeah. When you're seeing all-time highs, you should get a little bit nervous.
Mm-hmm.
This was what the best investor in history, Warren Buffett, says. When everybody's panicking, get greedy, or whatever.
Yep.
And when everybody's, I'm screwing it up, but basically, buy low, sell high.
Basically, yeah. When there's fear, just overcome that fear. And
when there's too much optimism, get scared.
Yeah.
When there's too much optimism out there, that's when you got to get scared.
That is so interesting because like my stock portfolio, when I look at it, like, you know, Bitcoin was up to 123,000. Like this morning, I'm like, should I sell it?
Yeah.
This is what I'm thinking of, like, should I sell my coins?
Right.
Not when it goes back down to 60 and I lose all my money.
Right. Yeah. It's your emotions can get the best of you, but I typically get excited when I see big red days.
Yeah.
Remember when Tesla was down 14%?
Yeah.
I use and here's something we didn't talk about either. When you're investing in these, eventually you can unleash margin, and that's where your like Robinhood or whatever your brokerage can give you a loan for like, and they can, like I had a loan.
They take your stocks as collateral.
They take your stocks as collateral and like, hey, use some more money, and mine's at 5.75% annually. So if I can use margin and beat that. Now you got to be careful if you're using all your margin and then your stock portfolio goes down, they will force a sale. Yeah. To recapture their money. So you got to be careful not to use all your margin. Well, use half or whatever.
Sure. Okay.
That's me. Use whatever your advisors tell you to use.
Right.
But I think
you should get an advisor, by the way. Don't just jump right into options.
Yeah. But I had all my equity trapped when Tesla went down 14%, but I had margin available of like 37 grand. So I used 25 of it, 20 grand. Yeah. And I bought Tesla when it was at like 285. Okay. And just a week later, it was like back in like 300s again. Yeah.
It's like a Black Friday sale. When I see red on stocks, I'm like, oh, yeah, great.
So sometimes that's when you can use leverage. Is when you have those red days.
Can I ask another question about margins, because I don't know a lot about it? Like again, my stock portfolio is like, it's the missionary position of stocks. It's like Vanguard mutual funds, and that's about it. With margin investing, so say you they use your stocks as collateral. Do you make a monthly payment back to them? Is it like a loan?
It'll take it automatically.
Okay. And then how do you pay for that? Does it come out of your just brokerage account or your cash account, or does it charge your credit card?
I think it will automatically sell. It depends on how you have it set up.
Sure.
But right now I've got 35% of my margin being used. So they're not going, let's see. Off the air, I'll have to answer that question because I don't know right away, and I don't want a bunch of dead air. So we should just wrap this episode up, and I will find that out.
All right, sounds good.
Because I just got into using margin over the last month or so, and I think it did have its first payment. I'm not sure where it came from in my portfolio, but I wasn't. The cool thing about it is like you can pay it right off too. I used it.
I usually use butter rather than margin.
Right.
Dumb.
So you got to watch out for margin calls. Okay. Don't use all the margin that they give you. That way you're not forced to sell stocks.
Don't be an over-leveraged Nick Beveridge.
I've been there.
You've been there.
Yeah.
Cool.
Let's wrap this up.
Well, this is really good. So yeah, thank you. Like, again, this is not something that, like we said at the beginning of the episode, real estate is down. It is hard to buy real estate. This is something you could do with your capital. You could also do notes. You could also do private loans. There's a lot of things you can do to keep money moving. This may not be the play for you, but if it does interest you, maybe reach out to us. We'd love to talk with you more, or reach out to your financial advisor, who can probably give you better information than we can on the subject.
True that. Thanks for listening, everybody. Hope you learned something. Yeah. And let us know if you have an idea for a new topic someday. We promise we'll try to talk about real estate on the next episode.
Yeah, we will. Awesome. Well, hey, thanks again for watching or listening. If you enjoyed the episode, as always, go on Apple Podcasts or Spotify and leave us a juicy 5-star review. We love those. And we will see you next week on the Investor Shed Podcast.
Also, if you want to see Jeremy in a tank top and you're not worried about his farmer tan, please let us know.
Thank you so much for checking out the Investor Shed podcast. If you enjoyed your time, make sure to leave a 5-star rating and review on Apple Podcasts and Spotify. Follow along on YouTube, TikTok, and Instagram at The Investor Shed for shorts and promos about each episode. Do you want to be a guest or know someone who has great real estate investing advice and stories? Reach out to us at theinvestorshed@gmail.com.